Do-do-do-do-do-do. All right, good evening, everyone. So we are just waiting for people to stream in, come in. Hope you had a good weekend. Let's all get prepared for next week coming ahead. I hope most of you guys who is in this room is in some sort of long already in the long position for go. That means you would have been making ka-ching. Yeah, if you missed the rally, that's kind of a pity. Yeah. It has really. I was just speaking to Alexis before the webinar starts. I think we have really very few reasons to actually short go at the moment. So if go, whichever time frame you're in, personally, that's just my non-professional take is that if you have any reasons to get into go, price action or trend, it might be a good time to get into it. I mean, majority of the world gets long, so why not join the fund? We don't know when they will actually plummet. Then again, you might not want to say things out loud. Kind of a test. All right, so I'll be sharing my screens. All right, so as usual, I'll be going on the technical analysis part on the currency indices, and I have arranged the indices from my most bullish pair to whatever I don't know what they are really doing, and my bearish pair, which is right at the bottom. That's easy for you to view. So in a nutshell, the summary is that I'm bullish on euro and pound. I really don't know what CAD, Aussie, yen, and Swiss is doing, and I'm pretty bearish on Kiwi and dollar. Yep. So that's a nutshell, right? So let's pry open the nuts and see why my opinion is as such. Now for euro, I think the way I mark my level is pretty self-explanatory. Is that you can see that a couple of weeks back we have a pretty nice looking low test bar rejection from this level, which is the previous high also. I mean, price really just gaps up and then comes down. And then it's a classic break and retest. I'm on a weekly chart, by the way. So whatever price action you see here does represent quite, I would say, a sideways movement in the lower time frame. But on saying that, I would say that price is still looking pretty bullish by just the weekly price action alone, and it's yearning to go to 120. Yeah, as such, I've placed euro as my most bullish pair. Now, the next on my list is euro and pound is always the best buddy. You can see their chart. I would say have a 70% mirror effect. Yeah. So that gives us a bit of a conundrum. So if you're going to long euro, and you're going to long pound, that's like a double whammy. Yeah. So whichever one looks nicer to you, on the actual forex pair, choose one. Don't go on both. Correct? Or you can simply switch to euro pound pair and see which one is more bullish to your liking. Yeah. So as what I'm saying, pound and euro is looking the same, have a very classic break and retest. And pound is actually, to me, you can see at the previous price action, very bullish one. Double inside bar, which is a double test bar, and then gaps down, close really bullish up. So at minimum, on the weekly chart, price is yearning to go to 137 and aiming for 140. All right. So euro and pound best buddy of the year of almost the past decade. Choose one which you like the best on the other time frames and go for it. Now the Canadian DAX, again on the weekly charts, look, I would argue that this is a pretty strong horizontal level, a very strong support level. But I've seen more bearish bar than bullish bar over here. So I don't know how long price is just going to wobble around here. As such, I place it right in the middle. I don't know where it wants to go. But on a mid-term view, I do think that price will actually bounce back up to 73 because this is really previously, this is where it kind of wobble at this entire range. Yes, here, right? So, but other than that, let's go for the immediate view. I would argue is here. So we do have space to go, but the price action really doesn't justify long CAD at the moment unless you're trading reversals. Now, for those of you who are in the show for a quite long time, you would have already known by now that I really hate trading in the middle of nowhere. Australian dollar, yes, one look is bullish, but At the same time, it's really in no man's land. At the moment, we can see that it is in a messy range. At the same time, it's in the middle of nowhere. So I can't really argue that this really has a bullish sign to it. Yeah. Yen is, I would say, is even more distasteful to me. Uh, very clear-cut range, very clear-cut in the middle of nowhere. So I can't really have a clear outlook where it wants to go. So such pair I really don't like to trade. I would just prefer to pull it one side. Now Swiss, on the other hand, again, really short-term view, that means in the past few months, you can see that it's trying to go high. But if you, again, I'm on a weekly chart. If you zoom out, price has never been in this area, and in the past, it has a really, really nice looking rejection off here, right? So I would argue that the Swiss franc actually wants to go lower, but the price action does not has that look at the moment. Yeah, so again, reversal trader I would say you might probably love this, but for trend traders like me, I would just stay out at the moment. Next on my list is Kiwi. Now Kiwi, yes, Kiwi and dollar, I would love to short, but Kiwi is on a potential to short list, right? So it has not given me a clear-cut sign that it wants to go short, but it's on a very nice looking whole number level, which is $60. So I would argue that price might just come and touch and then break down, or it might just decide to close the gap next week, again on the weekly chart. Yeah. So I don't like to trade in the middle, so I would love to trade at the extreme ends of a range or a trend. That's where I love to place my trade, and Kiwi happens to be on the extreme end. Yep. So this is where I'll wait patiently for Kiwi on a 4-hour time frame to give me a lower high, then I will go short, or actually a double top if it forms. And then last on my list is actually dollar. Yeah. So dollar, you can see that in the past, it has definitely go to 90. Very nice. It If you remove all the lines, just look at the immediacy, it will give you pretty nice looking lower high, lower low, lower high. And the recent price action is just all those nice looking wick. I also love to trade wick, so multiple upper wick rejection just tells me that price wants to go lower. So dollar, it will be the most bearish pair. Now with that, we are just simply going to trade the strongest against the weakest. So euro dollar, I'm just waiting for price to break this really, really nice looking ceiling, break and retest, and I'll be happy to go long, right? So if you look at the immediacy, it has really give you a nice marking looking higher high, higher low, higher high, higher low. Yeah, so now, yes, it's in the middle of nowhere. So I'm not saying get in right now. I'm just saying wait for price to break it, retest, and we can go for long. Again, pound dollar, euro dollar, best buddy. Really, really similar looking chart. So don't trade both. Choose one which actually give you the nice looking break and retest. Go for it. Now, Euro Kiwi, I'm bullish on Euro. I'm bearish on Kiwi. So here's what I'm waiting to do. I'm not about to trade reversal. This place, I would love to trade if it really gives me a very clear cut, higher low. If it does happen, at the same time, it will really look at an inverted head and shoulder. Yeah. So if the inverted head and shoulder does happen, so this would be actually the very, very first opportunity for a trend trader to get in. For people who trade here, that's me. I would really aim for big risk to reward, because such places might not signify a change of trend. But if it does, then this gives you the best risk to reward. For those of you who are uncomfortable trading here, wait for the second higher low. Now, this would really signify a change of structure. There's a new uptrend going on. Pound Kiwi, so again, best buddy, pound and euro is really the same thing, right? Either trade the inverted head and shoulders or trade the next higher low. Now, the bonus pair that I'm going to look out for this is odd yen. Odd yen, yes, these two I've placed in the middle, which is really I don't know where to go. But odd yen itself, if you look at the H4 chart, really, really nice looking. Now, if you look at the dollar, but if you look at on the daily chart, let me, you can see that on the daily chart, price is actually fast uh, heading into a very, very significant horizontal level. So do not trade straight to the level. I think it's a really, really bad idea. So if price breaks this resistance level, come back for a retest, then that's where I'll be interested to get in. Yeah, be it on the daily or the H4 chart. All right. So for those of you who trade at the lower time frame, I sincerely doubt that it will give you any much of a significant retracement. If it did, and you can get 1:1 by trading over here, then yes, that might be a good choice. If you cannot get 1:1 before it hits the significant ceiling level, don't do it. Yes, be patient, wait for the break and retest. That would be the more much better choice to actually get in. So with that, I will stop my yapping and then hand over to Alexis and see what's her fundamental outlook.
All right, thank you, Lloyd. All right, hello guys. So let me just share my screen. Hang on, where is the share screen button? Okay, there you go. Okay. All right, so first up, always a quick look at the Forex Factory calendar. And what I'm actually interested in seeing next week is actually what is the Australian unemployment figures that come out next week. So the Australia market is actually a bit interesting right now. There are a lot of opportunities to long the Australian dollar. Momentum wise, it's also, seems to be on the upside and on the fundamental basis, right, because of the interest rate differentials. So if you see the AUD interest rate differentials, right, it's currently at 3.6%, which is still one of the higher interest rates given in the market right now, and growth rates as well. So it's not like super great, but the recent GDP figures have been quite healthy. So there's a potential growth rate that's appearing down there. So theoretically, if interest rates, if inflation rates, can hold. So inflation now is at 2.1%. So if inflation can hold, this means that there is going to be more upside possibility in Australia. Now, there's a bit of political stability, which means nothing too fantastically weird happening in Australia right now. On fiscal position, their government debt and deficit is low by global standards. So if on a measure of the debt ratio, I would say it's kind of looking pretty good as well. And on the commodities side, I think in the recent months, especially the iron ore futures have been trading at one of the best levels, partly probably because of the tariff situation as well. So Australia's terms of trade actually is also pretty healthy. So what I'm actually looking for is a bit more of upside on the Australian dollar. Now the question usually is, what do I then pair it with, right? So if we look at Aussie, I think I would like to go back to the Aussie Swiss. Now, while the Swiss is not particularly very, very bearish, but given the statistics is more of a, I would say, neutral, slightly bearish, but slightly neutral. And also one point against the Swiss is it's been on the upside for very, very long. So a currency pair that I'm actually looking at, this is on a weekly time frame, is the Aussie Swiss. And Aussie Swiss, why I like it mainly is because on the JDR Securities platform, it is giving us positive swaps, which means we don't have to rush to get out of this trade. There is enough time for the trade to breathe in a sense. So I have a level over here, which is the $53 level, this upper limit over here. So what I'm looking for, this on a weekly time frame, if we go down to the daily, what I'm looking for is I'm looking for opportunities for price to break above the $53 level and then give us a retest to the upside. All right, and this could take some time. All right, so it's been living in this area for really, really long right now. I think if we look at the current, it's been here since I think July, so almost a year. So it's been trading in this range for almost a year. Is it going to finally break out? It's already tested this level once. Okay, so it's tested this level. I think once, this is the second time it's tested this level. So if price does come back down, it's pretty normal, but I will look at buy areas anywhere at this level, at the lower half of this range over here. And to get that confirmation is for price to kind of break and retest towards the upside. So while price is not the best place to buy now, but it's definitely a potential because as the Australian economy continues to, improve, and of course, if China does get back on its feet a little bit faster as well, then we should see a lot more upside coming into Aussie dollar. The question is, when do we buy in? So for this one, right, I think on a shorter time frame, meaning that if we for the shorter time frame, I'm looking for possible buys only if price kind of gives us a retest, okay, to give us a retest at this area. So basically a technical level. I do want to see retest into the 0.53. TP1 would be at 0.53 because we want to make sure that price really can break above the 0.53 level. As you can see, it's having difficulty breaking over. Every time it hits 50, 53, there's a lot of selling pressure over here on a technical level. So we want to be on the side of the major market movers. So only wait for the break and retest before it's a confirmation that this particular, I would say, range has been broken. I think it might happen pretty soon, maybe another couple of weeks, couple of months, mainly because it's already trading out of the minor range. So we have a small range over here. It's forced break up once already. This is the second time, and on the third try, it might really finally push above. So it's all about a bit of timing. And again, of course, waiting for that commodities market to start to continue being strong. And if you look at the commodities market, and of course, oil being one of them as well, where is oil prices at this moment? Oil is really floating at the $62 level, also at the lower area of this area. So oil traditionally, seasonally, it usually goes on a rally towards the end of the year. All right, so the question then is this going to be in time with the seasons? And seasonally might not be the best play right now because due to the Trump tariffs, I think the seasonal data is going to be very, very different from past years because things politically are not the same anymore. So the question is, even though politically they're not the same, but will will oil price continue to have the kind of strength is needed to push towards the upside? So I think over the last couple of months, especially, you can see oil really, really very choppy, trading really in price ranges. So it's now holding quite strongly above 61. I'm questioning whether it will touch the $60 before going back up. If this does happen, then it will give a bit more upside to the commodity currencies, Australia dollar being one of them. The other currency pair that I'd like to look at is also the Euro Swiss. Now, the Euro Swiss, very, very similar to the Aussie Swiss, is that it's got positive swaps to the upside on JDR securities. And why do I like this pair again? If we look at it on a weekly time frame, it's really at an all-time low. And the euro is a little bit more robust comparatively to the rest of the economies. So there's two reasons why I like the Euro Swiss. Number one, it's at an all-time low compared to the Euro Swiss, which means there is probably more buying pressure at this bottom area. But if we go and look at the lower time frames, the question is when do we really want to jump in? So it's all about waiting for that levels and not jumping in too early. So we have a little bit of a range as well. I think 0.94 is the current upper limit of this so-called smaller range, right? So I think there'll be a bit of upside, a bit of resistance over here. I will only want that confirmation again if it's able to break above 0.94, but more conservatively, I think 0.945, this area would be a cleaner buy signal from a technical perspective as well. So price has been rejected off this area. So high probability price will kiss this area again. And then the question is, will the euro have enough conviction to break and retest and hit towards the upside? So while I am a bit bullish on the euro, the question is the Swiss currency soft enough to accommodate this level? And will there be any interference from the Swiss National Bank as well? All right, so the Euro Swiss is also one buy area. Sorry, yeah, the buy area is around this area. Anything touching this lower zone, I would say. And then no rush because positive swaps, right? So nice long holds all the way to at least level 1.94, 0.945, and then only if it gives me a clear technical break and retest, then we can potentially hit towards the next level, which is about 0.965. So this is fundamentally where I think euro has the potential to go over the next maybe 6 months, I would say. But very, very annoying thing about the Euro Swiss, it's very range bound. You can see the candles are very, very choppy, which is why I would not recommend buying in the middle of nowhere. I would only like to, explore it at the lower zones. But once it does get there, then the question is we have to be kind of ready to know what are the types of trades we take. So your strategy and your, trading journal and your planning will still come in as well. And that's all I have for this week. So in summary, I think I'm on Lloyd's side. I'm pretty bullish on the euro, a little bit soft on the Swiss. But I'm a bit more bullish on the Aussie as well because I think the Aussie recovery has potential. So that's where the Aussie Swiss comes in. And a little bit of a cleaner break and retest above the 0.53 level. If we do get that, then I think 0.5545, this upper limit here is a possible profit level for the first move, I would say. Hope that's all for me this week.
All right, can I jump in at
Yes, please do.
I'm just yeah. So Alexis has just talked a bit about oil. I'm just going to share something of my own bias, which I've been trading for the past few years. Let me see, where is it? I'm going to snatch Alexis' screen.
There you go.
Yeah. Personally, I don't trade oil. Uh, I got burned by it once. I think I'm scared of it already. But on the stocks side, right now I'm just changing over the stock side. Uh, I've always towards the end of the year, that means actually the last quarter of the year, I've always most of the time I always long natural gas. And you can see from 2017 to now, uh, starting from July, August, September, October, November, you can see that this is a pretty good period to actually power into your position for long natural gas. Especially you can see since 8 out of the 9 years in the past, natural gas have always closed bullish for that particular month. So, and this year, no difference. I'm still going to long natural gas, just going to find a pretty solid looking setup. I'm just going to get in. Especially now, I would look, I hope I'm not offending anybody by saying this. I think India will fall to US pressure. They will just sort of wean off some of cheap Russian natural gas imports. Yeah, so that will actually make an impact on the market because once the cheap imports stops flowing in, then naturally demand and supply law comes in. It will price in higher. Yeah. So the technicals says that from September, October, November, pretty good time to actually get in, especially September. Yeah, position yourself in for a long natural gas. I don't know whether you trade stocks or MT4, MT5. Yeah, that's about it. All right, with that, thank you for joining us this evening. Hope you all got something out of it. See you next time.